What a week that was. A huge election night, big moves in the market. We're seeing some consolidation, but where does the market go from here? And those are the questions I'm going to be addressing here on the week ahead video. My name is Blake Morrow with Forex Analytics, and we are going to be talking about all the events that happened this week and all the events that are happening next week and some of the best trade setups around all of these events. So welcome to the video, and we're going to get to it. And like I said, we had a huge election. Trump came away victorious. I think the market was anticipating that, but just how victorious he would be, that's been a little bit of a shocker to most people. It looks like maybe we might know as soon as this weekend that we might have a full red sweep, and that was just going to further bolster the market. Now, I do want to spend a few moments before I get into the charts and everything that's happening this next week. I want to talk about what a Trump second presidency would mean for the markets, some of the risks that are associated with it. And, I want to talk about that 2016 analog. And, we discussed this the previous week. The 2016 analog, it would have been on a surprise. A surprise, in my view, would have been a Harris victory. I've told traders on the F.A.C.E show, those are our free daily shows. If you don't know how to find them, you can just be here on the website and just go to where it says webinars, and you can go ahead and register for the free F.A.C.E show, and we have a flow show right here. So make sure you do that. Those are our free shows on Forex Analytics. But one of the things I did want to mention by saying that is that we've talked a lot about how a Harris win would have created a little bit more volatility in the markets, but a Trump win, well, so much, was expected. Now, what we've seen is this increase in stocks. The dollar is kind of consolidating, gold's consolidating, crypto continues to break out, but there are risks around the markets. And I think the risks are immediately facing is if, the Republicans do not take the House of Representatives, and then we have a split Congress, you might see a little bit of selling just near term regarding that. But overall, the market and people are really quite excited about the future, at least in the stock market near term, especially with who President Trump is going to be bringing in to his administration, whether it's Elon Musk or some of the other Lighthizer or maybe some other people around him. A lot of people feel very bullish as a result. Also, knowing that seasonality is another issue that we're dealing with the markets, where markets continue to rally, usually in the months of November and December ahead of the Santa Claus rally. Also, in regards to tariffs, are they a risk? Or was it just I don't want to say marketing ploy, it's not a negotiating tactic of President Trump and what he's going to be doing and how he's going to be approaching different countries moving forward? Gets them into the negotiation process with different countries. So is tariffs really going to be applied at the rate that he had mentioned, as he was campaigning? The jury's still out. So a lot of people really question what's happening with tariffs, but there's inflationary risks. Those are risks that are real. And I think that's something that the Fed chair this week, even though he didn't reference anything political, the fact that they took out some references from the FOMC statement really does suggest that the FOMC is going to be concerned about inflation risks and inflation expectations moving forward. And that's something that we as traders need to be paying attention to. And then, stocks, where they're at right now, there's only risk if you stop seeing higher highs and higher lows. So we're going to go into some of those charts. As a matter of fact, Nick from Trading Analytix, he's going to talk about those charts as well. And then last but not least, the dollar. I think the dollar is kind of sideways right now. Everybody's taking in what it really means for the dollar moving forward. A lot of people would argue that the Trump administration or the incoming Trump administration is really going to try to manufacture a weaker dollar. That may be true and that may be the case, but it's to be seen. The flip side is, would some of these Trump policies be, good for dollar strength? I think they would. So we're going to look at where those breakpoints are in the markets. Now, one of the things about the week ahead video is it's a fairly long video. It should be chaptered. So if you're watching the video right now, at least a few hours after it was released, look down below. There's going to be different chapters. You can get to some of the spots that you want to get to. Also, I'm going to do this week ahead video a little bit differently. If you can't tell, I'm actually exhausted right now. As you can imagine, trading around the election and just lack of sleep. I'm a little exhausted, but I'm going to go through everything that's happening this week. I'm not going to go through the charts. We're just going to talk about, all the calendar of events, everything that's happening this next week. You can follow along on Forex Analytics or just follow along by listening. And then from there, we're going to actually do a little bit of work, technical work on a lot of these charts because of the election, things have changed a bit. All right, so let's start off with what's happening this next week. So, and I'm gonna talk about these events. Again, you can follow along on your calendar, and if there's something that I missed, make sure you jump down in the comments below and mention it down below on anything that I might have missed. So the first thing that we're going to be dealing with this next week is well, first of all, on Sunday it is the Marine Corps birthday. So hoorah, all you devil dogs, happy birthday to you. For those of you that served in the Corps like myself, happy birthday. But that's not the only thing we're dealing with on Sunday. Actually, Sunday evening, which will be Monday morning in New Zealand, we'll have inflation expectations. That's also gonna be, that could be a market mover, especially if you're dealing with New Zealand dollar. Monday throughout the day, it will be Veterans Day. So I want to thank all of you, men and women around the world who have served in your country's military. Thank you for your service. It's a very selfless thing to be able to give yourself away for so many years and serve your country. So for those of you that have proudly, I salute you, and happy Veterans Day to you. All right. Also on Monday, we're going to be dealing with Norwegian CPI. So just keep that in mind. And now we're going to be talking about the US dollar and Norwegian krona, because this is one of those that moved a lot during the elections. You can see this volatility here. So I'm going to have to do a lot of technical work on the Norwegian krona a little bit later. On Tuesday, we have the UK jobs data. So we're going to have the sterling is going to obviously be in focus on Tuesday, so just keep that one in mind. And let me pull up the sterling. And as you can see, a lot of these dollar pairs, lots of volatility happening the last couple of days. We also have on Tuesday night or Wednesday morning in Australia, we're going to have the Aussie wage price index. So the Aussie dollar, and I'm going to actually be focusing on the Aussie yen a little bit later, so make sure you stick around for that. Wednesday. Now you think we're all out in the clear in the US? We're not. Actually, we're going to have the US CPI data, which will be out. That'll be out on Wednesday, and then Thursday is going to be US producer prices. So obviously, we're going to have the dollar in focus. Whether you're looking at the euro dollar or whether you're looking at the US dollar, Japanese yen, the dollar is really going to be in focus there. Moving right along. We have Wednesday night out of Australia. RBA Bullock is speaking, and then we have Aussie employment. So Aussie employment is going to be really important as we are dealing with it's just not just Aussie Bullock speaking, the RBA Bullock speaking, but employment data as well. And then also what's happening in China. That's another, you can see the sell-off that happened today. That has a lot to do with the China lack of stimulus that was announced Friday morning in China this week, actually this morning as I'm filming. Also, what else is happening on Thursday is we're going to have unemployment claims in the U.S. We have the Banxico rate decision. Now, Mexico is expected to keep rates unchanged, but we're going to talk about why this volatility happened. So we're going to talk about that in a little bit because I do have to do some work on the US dollar Mexican peso. Lagarde and Powell are also speaking come Thursday at a couple of different events, not at the same event, but near the same time. Thursday night, we have China data, industrial production and retail sales. Friday, we have UK GDP, and then we have US, we're going to have US retail sales data and Empire State Manufacturing. So there's a lot of data that's going to be coming out this next week that could move the market. Now, I'm going to go through these individual currencies. a few of them because I think it's really important that we understand what's happened, especially with the dollar. And then we're going to talk about other markets too. We're going to talk about gold and copper and crude and everything else. But let's just start with the euro dollar since I have it on right now. Now, what you're going to notice about the euro is the very weak close on a weekly chart. And let me pull up that weekly chart really quick. You can see how we closed below this trend line. Also, and I'm going to have to remove this fib level. Not only did we close there, but that's a bearish outside week. You could call it a bearish engulfing week. Usually we don't call them engulfing candles in the FX market just because it's open 24 hours a day. But since a weekly candle, this is actually bearish engulfing. So not only is it a bearish close on the euro, it's a bearish engulfing candle as well. Now, the other thing I want you to also realize is that the recovery of the euro has been quite tepid. You can see how we recovered just above the 38% retracement. Matter of fact, if you would have asked me earlier this week, I didn't think the euro was going to take out 108. I'd said it on the trade-off show that I did with Chris Weston and Pepperstone Securities in Australia. I said I think the euro is going to bounce, but it shouldn't get much further than 108. Well, we got past 108, but we failed, or 109. I meant to say we wouldn't get past basically the 38% retracement or 109. We didn't. We did, but just by a few pips, but then we failed again. So the thing about the euro is it is trading heavy, and it's not only due to the elections, it's really due to the German government collapse, just weak growth in the Eurozone. And if you look at the euro just across the board, it looks pretty weak. But at this point in time, the question remains when you're talking about the euro is how far can we go now? And my opinion is, while we're below this breakdown point, actually I did mean to say 108 because the 108 was the 24% retracement right here. And this is post-election, and then that was the rally back, and we got to 108.20. That's what I meant to say. Sorry, guys. It's been a long week. I have not got a lot of sleep this week. So always keep that in mind while we're going through this. Okay, but as you can see, we got to 108, stalled. This is post-election. Got to 108. I didn't think we'd get above that. We did slightly, but you can see these are very shallow retracements. So what that really means is it opens up the door for further dollar strength or more euro weakness in the days ahead. That's possible. The flip side is that could be a double bottom. Let me stop for a moment and let's talk a little bit about the dollar as a whole. Following this election, there are two schools of thought. There are that the tariffs and pro-Trump policies is going to be very strong for the U.S. dollar, but the other camp, and like I was thinking, if I didn't mention it earlier, I mentioned it on an earlier show. There's been a lot of emails circulating around in my sphere about things that the Trump campaign had said while campaigning, which was, we want a weaker dollar. Again, I'm not in that camp until we're proved that, because candidates and their running mates will say a lot of things that whether they can engineer it or not, or whether they can make it happen or not, is we will see. However, there, I think, is a desire to keep the dollar somewhat suppressed to make sure that the U.S. manufacturing base starts to build again. And so that is one thing that we do have to keep in mind if we are long the dollars. Now, technically speaking, I get long or get bullish the euro or bearish dollars on a move back above this 108.20. And then obviously a move below this 108.60. And you just got to imagine we're going to have a continuation. Now, the question that you might have at this point, which I do, which looking at the charts, how far can we go? And so that's when we take this low to this high and you go, okay, well, a further break lower should take us to 106. 106 is the 78% retracement. You can see it right there. It's the 78% retracement. So that would be the logical stopping point for the euro, next stopping point on the way down on a breakdown. I'm not quite there yet, but obviously we're closing on a very weak note. Let's take a look at the cable, because the cable, this has been one choppy pair to follow. It has not been pleasing to trade. If you guys are trading sterling, you've probably been whipped and you might need a little bit of a neck brace. But you can see this is a 50% retracement. And the other thing, and I'm going to delete this with this line that you see. This is the previous triangle that we had drawn here. I don't think that's really necessary right now. But what I think it is necessary is this trend line right here. You can see how important this level has been. Matter of fact, I'm going to delete it, and I'm actually going to draw it more as a range. And I would say, while we're below this range, you can see this low right here that came in September 24th, this high right over here, July 24th, or I can't say 24th, that's the year of 24th. That's July 16th. Again, it's been a long week. That's September 11th, of this year. And then you can see these highs right over here around October 30th and then November, whatever that is, November 5th, November 6th. That's all going to be very key resistance. As long as we're below that, you got to stay a little bit bearish. But again, the flip side is it's been extremely choppy waters if you're trading sterling. Now the Aussie, this has been one of the more interesting, interesting is probably not even the word I should be using right now. It's been one of the more vicious movers in the market. I had thought I was pretty bearish the Aussie dollar following the election. I'm like, okay, the Aussie's going to underperform because, President Trump is going to play hard against China. That was going to be it. That's the narrative. But what you saw is the Aussie really recover as the Trump trade unwound. But then because the Chinese stimulus didn't impress the markets. Matter of fact, if you looked at the Chinese markets on Friday, the CNY 50 was down 5%. Well, you don't need to look any further in the FX market to wonder why the Aussie was so weak. What this is doing is this is setting up near term a megaphone pattern. And so megaphone patterns are, whoops, I didn't want to do that. There we go. Megaphone patterns are really interesting because if we're following this lower trend line, we might actually get a reversal somewhere close to 65 cents. So in other words, if we make it down towards 65 cents, you might be looking for a bounce somewhere down there. Flip side is if we get a move back up to the 200 DMA, you'd probably look for a move like that. Obviously, it's very choppy right now, so you need to be very careful trading the Aussie dollar. One of the other currencies I want to talk about really quick is I want to talk about the US dollar Canadian. I'll come back to the Kiwi, don't worry, because I know we have New Zealand jobs report. But the dollar Canadian is perched right up against its 139.50. We tested it a couple of times this week, but you can see right here, this is major resistance any which way you slice it. If we break through 139.50, the 140 level is coming really fast, and I break above 140, it just opens up a lot of upside. But why is this so important to you, and why is it so important to me? Well, I'm gonna explain to you guys something really fast. Let's delete this. I don't think we need that for right now. We're gonna redraw this, and we're gonna put this over here. But the reason why this development that you see here is so vitally important to what we're doing is because the pullbacks have been very minor. If you look at the rally that we've seen here, we've only pulled back to 24% retracement. Now, why in God's name is that so important? Well, it's because it is a very shallow retracement. And when you have a very shallow retracement, that means you are not giving traders the opportunity to exit. So what that means is the risk is increasingly building for this next week of a break above 139.50. Now, again, I'll say this one more time. I'm not extremely confident in the dollar right now, but that doesn't mean I'm unconfident about the Canadian. All right, so I want to show you something this is from my FX book, and this shows retail positioning. Take a look at the Canadian positioning, right? Right now, in the dollar Canadian, the market is retail traders are 95% short out of all of those different positions. You see out of, what is that, a total of about 53,000 positions registered at my FX book. 95% of them. 95% of them are short. So you guys know this as well as I do. And when the market is, really long or really short, the risk is tilted to the opposite direction, especially when you're talking retail. So a move above 190, 139, 50, 60 should create a hell of a squeeze to finish off this bullish flag pennant pattern. Have that at the ready. I did want to talk a little bit about the Kiwi just because we do have New Zealand, employment. And as far as I'm concerned, while we're below this blue line, we should probably stay bearish. It is obviously whipping around very similar to the Aussie dollar. Could we be creating very similar to the Aussie, some sort of megaphone pattern? Yes, I think that is a distinct possibility at this point in time. That means fresh lows will be bought, fresh highs will be sold. So again, if I have to illustrate it in trend lines, it looks something like this or something that would look like this. Okay, last but not least that I wanted to look at technically in the currency market is the US dollar Japanese yen. I actually need to look at the US dollar Norwegian krona too. So I'll make that too. First of all, the US dollar Japanese yen. This is a currency pair that I think needs to be on the radar because we might not be doing this. We might be actually doing something that looks more like this. Like we have an ascending channel. This is the way I'm viewing it. And well, you guys can see it on Forex Analytics. If you go over to the US dollar Japanese yen, right here, and you go to basic technical analysis, you can see the charts that I have drawn up. This is from yesterday and the day before and the day before that. So looking at the dollar yen more as a ascending channel now. And so why is that important? Well, because we're at channel support. And so if the dollar comes under pressure, you could really see it coming under pressure here in the dollar yen first. I would actually look to be a little bit more bearish, the dollar yen, if you start breaking below this level. Let me just go ahead and illustrate that for you. So right around this level, around the 150, 130 level, that's where things turn decisively bearish in the dollar yen. So keep that in mind. Now, last but not least, US dollar Norwegian krona. I think you guys remember me saying this last week. A break above this resistance is bullish. A break below here is bearish. We got to resistance. It stalled. But now what we've got is we've got a lot of whipping around, which means that this is probably more of a range than anything. And yes, does this matter? Does this chart still mean something? Yeah, but I think we need to break out of the range first before we can make a decision on which direction it's going. That means I'm more interested when we're at the upper end of its range, or I'm more interested when we're at the lower end of its range, if that makes sense to you. Okay, so as you see here, the markets are very, very volatile. And volatility is good. So the question is, how do you take advantage of volatility? Well, you take advantage of it in the trader funding program. So if you guys haven't checked out the trader funding program, this is a way that you all can access larger amounts of capital without putting your own capital at risk. Or if you don't have a $25,000 account or $50,000 account or $1 million account, and you don't have access to that type of capital, this is an opportunity for you. The only thing you have risk right now is your assessment fee. The assessment fees will vary based on which account you are looking to access, but we have simple rules. All you have to do is get to 10%, make 10% return, or you can't lose more than 6% on a trailing basis. That trailing basis means as you make money, you can't lose 6% from your high water mark. That's all that means. There's no time limit. So it's a very, very simple one-step program to access larger amounts of capital. And I think most of you could do that. You can say, oh, I can make 10% without losing 6%. Great. Then this might actually be available to you or something for you. Now, why is this important? Because you do get access to Forex Analytics, our community. You can be in our chat rooms. You get to talk with people like me, throughout the course of the day. You can see, oh, Blake just closed out his US dollar Canadian for 55 pips this morning at 10:27 a.m. Or, Wuju is getting here. Or, oh, here's all Blake's opens positions. They're right there. It's not just me. It's different traders, different analysts in our community. But having access to that, do you think that's going to help you out? Where you can actually talk to somebody like me and say, hey, I see you're long the euro dollar. Why are you doing that? And I can give you an answer. Or, hey, I'm shorting the US dollar Japanese yen. What do you think? I'm more than happy to give you an answer. That is what's available to you in the trader funding program. One last thing I want to mention about this, actually two things. If you are new to the trader funding program, you'll get a one-on-one consultation with me. 45 minutes. You and I get to sit down. I'll tell you what's available to you. I'll explain to you, and I'll even give you some strategies and maybe some tips on how I passed an assessment or multiple assessments. And then you can actually take some of that information and hopefully it'll work for you moving forward. So that's one thing I want to mention. The other thing I want to mention is if you take a reassessment of more than $100,000, because let's say you failed your first assessment, you also get a one-on-one consultation with me so I can work with you to find out what did you do, maybe there's some things to improve. I'm going to give you a quick story, and this is a story of somebody who's actually listening to this show right now. There's one of our traders who is taking one of the assessments that's our bigger, if not biggest assessment, one of these two assessments. He sent me, I sent him a message or an email and I said, hey, do you want to meet? And he's like, no, I think I've got it handled. I think I'm good. Then he sent me a message this week. And he's like, hey, Blake, I'd really like to follow up with you about that message or that meeting that we were going to have. And so I was thinking to myself, well, he's probably struggling right now because the election, there was a lot of volatility and it's time to meet with him. So I got on a Zoom call with him. We started discussing and he's like, no, I'm actually, this close from passing. And I'm like, well, why do you need to meet with me? Because these are conversations that you can have with myself, who's been in situations like this, or other, where I can say, hey, when I'm on a win streak, I become a little bit more careful. Where some people, when they're on a win streak and they're this close to getting over the line, they start to stall because they're taking excessive risk. So having that conversation one-on-one with that trader that's going through the trader funding program, I think is beneficial. I said, hey, well, let me know when you pass. We're going to have another conversation. So there's that. All right. So anyway, great way to take advantage of the trader funding program. Make sure you do so. Now I'm going to go through other markets, but before I do that, we're going to bring in Nick Groves from Trading Analytix. He's going to cover the indices. He's going to cover Tesla and what it means to Tesla this election and Microsoft. So stand by. Here comes Nick.
Hello everybody, my name is Nick Groves with Trading Analytix. Blake, thanks so much for punching us in. I'm going to go ahead and cover the big three indices and then we'll talk about two tech stocks. So right now you can see that the S&P is at pretty key resistance. This trend line dates back from August and we're running right up into it. We're near the 161% extension of this recent range. That comes in at 60.53. If you're looking at the spot market, this level right here comes in at 60.10. And there also is another way to look at this S&P market. I also took the extension from this previous move. The 161 on that comes in at 60.40. But I think what's important to note is that we're at resistance in the S&P and we're also at resistance in the Dow. A very similar trend line resistance is parked right here as well. So will we get a turnover? I'm not entirely sure. Seasonality does suggest a rally after the election. And the market, the S&P is at 6K, so it looks like we're back on bull. But I will go ahead and throw out some of the support levels. Really, the key support is going to come in at 5,900, the breakout, and then big kahuna support, I'm going to start saying that, is comes in at 56.88. So this level right here, 56.88, 5,700, very, very key support. We're a whiles away from that. But I just wanted to make sure you guys are aware of where that is. Taking a look at the Dow, very similarly, the breakout level is going to be support. That comes in at 43,580, 585. Definitely watch those levels. And then as far as the NASDAQ goes, you'll see it's breaking higher above this resistance. But when I show you big tech, you'll notice that it's really just one stock that's really pushing us higher today. Obviously, that doesn't matter. The market's going to push where it wants. But we took out the all-time high, and we're back on bull. You'll notice that the next level of resistance, big resistance, comes in at 22K. So that's where we could be headed if this is going to continue. But I'll go ahead and run us into some big tech. So take a look at Microsoft. And like I said, you can see how the big, Mag 7 here is in the red at the moment. Tesla up 9%, which I am going to point out. But you can see that Microsoft rejected at the 618. Next line of support comes in at 419, and below there, big kahuna support 406. Microsoft's in a head and shoulders pattern. I know I've been pointing this out for a while, but we're just going to have to see how this all plays out. Looking at Tesla, up 9%. So Tesla made some serious moves this week. That's following the election. I think that's due to people feeling as if Tesla might get some government spending at their fingertips. Elon Musk did help out with Starlink during the hurricane, and Trump was in contact with him to make that happen. So their relationship is growing, and so might Tesla stock. So looking at this on the 8-hour, I think what's significant here is that we took out the high from July of 2023, and we also took out the highs of August of 2022. So the next line of resistance is going to come in at this 127% extension. That hits at 343. You can see I kind of have this sell zone here. Will we make a lower high from these previous all-time highs in 2021? I'm not sure, but it's kind of exciting to see this stock take off after being so lackluster this year. So I'll keep us up to date on that. If you're looking for more technicals and fundamentals on the big Mag 7 and the big 3 indices, give us a follow on Trading Analytics. I'll be updating us over the weekend. But with that, I'll pass it on back to Blake. Thanks so much for having us, and you guys all have a great weekend if I don't see you. Cheers.
Thanks, Nick. That was a great recap of the equity markets, and thanks for covering Microsoft and Tesla as well. That was awesome. All right, guys, so I'm going to continue on, and I want to talk about just a couple other asset classes. And then I'm going to review the trade setups from last week, and then we're going to talk about some trade setups from this week. So a couple things I just want to go over. I want to go over gold. I mean, gold, in my opinion, is starting to struggle at current levels. Now, why are we struggling here? Well, I think we're in an ascending channel, which means that there might be some downside in the near term. So let me redraw a couple of things, So there's your channel bottom. And this, I believe, is your channel top. Okay. So we are closing in on what I think is channel support, somewhere right around here, around the 2600 level. If you're a bull in gold, you probably want to be a little careful. And let me get rid of that fib extension, because we hit the 261% extension of the 4-year range, and then we broke out. So if we get below 2600, there might be further corrections to go. So just keep that in mind if you're trading gold. Okay, so that's something I wanted to cover. Copper. Copper has been, if you've looked at copper, we dipped below the 200 DMA after the election. We hit the 618 retracement, and then we bounced back, and then we've sold off thanks to China, the Chinese news that I mentioned a little bit earlier. And so what do I think is happening with copper? I think copper is going to need some more information. So what do I mean by that? Well, I think what copper is telling us is it needs more information about what a new President Trump is going to do, and what that's going to mean for global growth, and what that's going to mean for China. And so in the near term, I think we should need to look at copper as more of a consolidation. Okay. And last thing I wanted to mention before I talk about, I want to talk about two things. I'm going to talk about crude. Let's talk about crude. Crude, just really quickly. Crude oil, very similar to copper, is we are in this very, very tight trading range. Let me go ahead and I'm going to take this drawing right here. Oops, not that one. Take this one right here. Take this one right here. There we go. And I'm going to draw it like this. And I think that is our trading range. And your guess is probably better than mine on which direction it's going to go. But I would let the range break and try not to be a hero here. Let the market tell you which way it wants to break. And one last thing I wanted to cover was obviously Bitcoin. Bitcoin's at all-time highs. So the question is, where does Bitcoin go from here? And what I would do initially is take that high to that low. And we already know that the cup and handle pattern points to 100,000, but that doesn't mean we're going to go up there in one straight shot. I think what we have to be careful of is as we approach 80,000, just above 80,000, the 127% extension of what was known as the handle. So that is going to be key resistance. As long as we're above 74,000, we should be challenging 80,000 as long as the quote unquote Trump trade stays valid. Okay, at this point, I want to go over the 3 trades from last week, the 3 trade setups from last week, and I want to go over the 3 trade setups for this week. So first and foremost, from last week, we talked about the US dollar Mexican peso. And it said long above 2025 or short below 1950. And so what we did is we got a rally above 2025, and actually we came very close to the 78% retracement of this move. You'll see it. I'm going to draw it for you, right? Came very close to the 78% retracement and the 50% retracement of the longer term retracement, and then we failed. Fortunately, I sold it at, I think, if you go to the chat room, you can go through all the trades, and you can go the night of the election night, and you'll see that I sold dollar MEX at, I have to figure out what, I have to go back days. I sold dollar Mexican peso literally at 2072. I have to go back and tell you where I got out. Sold the Canadian yen. Anyway, I exited my dollar Mexican peso somewhere. So, right there. I closed all my dollar Mexican peso at 2074. So you see it in the trades room, right? That's where I exited. Does that mean everybody exited there? No. I think there's a lot of people that were continued to stay long. And so, unfortunately, it failed. That Trump trade kind of failed. So if you measure from last week to this week, it didn't work. But if you were in the trade, if you were in the chat room with me, it did work. So you can count it any which way you want. All right. The second one, long the euro sterling while below 84 pence. That has not worked. It's actually down at 83 pence. I was looking for a long down here. I am still long the euro sterling, just so you all know. The one thing I do have to mention about the euro sterling is we are at pretty key support down here. I don't want to say it's bearish yet, but I'll tell you what, you have to be a little careful with euro sterling longs. Again, I am long. It did not work out, not this week. Third, Aussie yen below 99 or above 101.70. So the Aussie yen, it rallied above 101.70 and it held it for about less than 24 hours or so, right? And then it failed. So I'm gonna count that one that didn't work out. But the Aussie yen, don't worry, it's still on my radar this week. So those are the 3 trades. And again, it was an election week, so you had to be very quick on your toes. Like I said, dollar Mexican peso, it worked for me. Hopefully it worked for you. The other 2 didn't work. And remember, it's election week, so you have to be really, really fast. And I don't think next week's going to change a whole lot because we're going to be focused on inflation. But at this point, I'm going to give you your 3 trade setups for next week. So the first one is short Aussie yen. Why? Okay, now why am I focused on the Aussie yen on the short side? Some of you can guess. Well, I'm focused on it because it failed at the 618 retracement. You can see it right there, right? But it also gave us a false breakout. So now I'm looking to short Aussie yen on rallies to 101. So if we can get a rally in the Aussie yen to 101, I am looking for shorts. Now that might be a little bit optimistic, but that's what I'm looking for after a false breakout. Trade setup number 2, sell the Aussie Kiwi around 110.50 to 110.70. Now, here's the thing about the Aussie Kiwi. I haven't had it on my radar much, but it's on my radar now. Why? Because if you look at the weekly chart and you draw this trend line that goes from here to here to here, you'll see that top and horizontal resistance is at 111. I had orders to sell Aussie Kiwi all week that didn't get filled near the 111 level, or at least the last couple of days. I am now looking to sell any rally in the Aussie Kiwi to 110.50 to 110.70. So where we're currently at, I'm looking for a move that looks something like this. Okay. All right. That's trade setup number 2. Trade setup number 3. All right. I told you guys about the Canadian, and I told you how I feel about the Canadian. And if you've been following these week ahead videos for months and months and months, you know that even as it was up here before, I said, look, I think it's eventually going to break I think it's going to break 150 or 140. It's going to trade above 140. But when it was up here the last time around, I wasn't convinced. And I thought institutional traders had to get washed out. They did. Now that we're up here around 139.50, I'm bearish Canadian dollars. But I don't know what to do with the dollar. So the dollar Canadian is not my third pick this week. My third pick this week is the Euro Canadian. And I don't know if I've done any drawing here. Well, not in a long time. So let's go ahead and delete all this. And let's do a little bit of drawing. Because right now you can see that the Euro Canadian is at really key lows. What else is at really key lows and key support? Not only the Euro Canadian, but what else? The Euro Mexican peso, or the Euro Sterling. I just showed you 83 pence. Huge support right now around these levels. So you've got a situation where the Canadian currency looks like it could weaken. I'm going to remove the dollar out of this situation. And you got the Euro Canadian that's at support where, you know, the Euro, some of these Euro crosses look like they could bounce. So I think the Euro Canadian long, while it's below 149.25, I think it is a bounce candidate for higher prices. Back up to 150, maybe even higher than that. So those are your 3 trade setups of the week. I hope you enjoyed them. And I hope you guys all had a great week. And if you like this video and you think it's instrumental to helping you just trade better and be better prepared for this next week, give me a thumbs up. Jump down in the comments below. I know there's some stuff that I missed. We have like Banxico interest rate decision this week, you know, which is a whole other situation I didn't talk a whole lot about, but don't worry, I'll be talking about it this week on the F.A.C.E show. So matter of fact, have a great weekend. My name is Blake. I'll see you on the F.A.C.E show on Monday morning. Thanks for spending your time with me. I appreciate it. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.